I was to trade to London, this is what I would do. Okay, so here's our midnight opening candle right here. Our midnight opening candle right here. Because it's a green candle, that means the body opened at the bottom, right? It opened here. It made an all-time low, right? Because this is a 1 hour candle right now. So it opened here, made an all-time low, made an all-time high up here where this wick is at, and then the body closed up here, right? But this is our opening price. So if I'm going to go label the midnight opening price, I'm going to go label it like this. Try not to cough in my mic right there. All right, so this is how I label my midnight opening price. Put a date on there so I can use it for, study purposes to learn, how long do these midnight opening prices work, right? So I would have done that. Then I would have dropped back down into the 1 minute time frame. All right, obviously I'm a little late for the London session, but that don't mean you still can't, come out here and learn something if that's what you want to do, right? So we're going to use this. We're going to use this vertical line right here so I can know where my midnight open was at. Because remember, I'm going to give y'all a quick lesson right here. All right, so this is our midnight open. The very next candle after that, we're going to be looking for our first presented fair value gap. So it's never the actual midnight. It have to be 12:01 and after. And because there's a gap right here and a gap right here, let me zoom in for you guys, you ladies and gents. You see this little gap right there? You have to gap all of that up when you boxing these, when you're using any gap, right? If you're going to use a first presented fair value gap, it has to be boxed like that. I mostly only keep the first presented fair value gaps from, first presented fair value gaps from the London session. And I know I said London session, but what I actually meant was I only really keep the first presented fair value gaps from the New York session on my chart. This is like if you was trying to trade the London session, right? This is what I would do. This year I'm not really trading London. My goal is to really be disciplined. I'm only trading the New York session this year. So if you're going to try to trade the London session, you're going to try to trade in between 3 a.m. Right? So you can start looking for a trade pretty much anywhere between 2 to 5 p.m. This is why I say I started to scream late. This is your window to pretty much find a trade. So you can see like pre-market, right? You can see like pre-market from midnight to 2. Consider this to be like pre-market for London. You see how it created this market structure right here on a 1 minute time frame? And then on a 1 minute time frame, price built out this liquidity down here, and then we seen that, we had a move going down like that to sweep out all of that liquidity. So, the only thing you can do now, if you was going to try to take a trade for London, is potentially, mark out this range like this on a 1 minute time frame. Right? If I go on a 5 minute time frame, see how it looks on a 5 minute? So, the trade actually look like it's getting ready to come up. But this right here, this is a order block. This little bubble right here, this little red candle on the 5 minute chart, this is an order block. So we have our range, we have our swing low on the 5 minute chart, then we have our swing high, and then we can box this little order block up right here. Just for study purposes, the price could fall right through this order block, but we're gonna box this up. It's in a discounted zone. Price is actually coming down right now to sweep some liquidity on the 1 minute time frame. Let me go back right here, show you guys how that look, right? See, we have these little lows down here, but if we're going to remain bullish and keep going higher, maybe price comes down here, gives people a chance to buy, and then goes back up there and sweep that liquidity, right? That could be like a trade idea for London session. And then we can use our little box to see our risk to reward ratio. So like, let's say if we was going to use this order block, I wouldn't really jam my stop loss up this high if I was going to take this trade. You know, I would have to have a really good stop loss. So I will use a stop loss from like the 1 minute time frame. You know, this isn't going to be a breakaway gap because price is already coming down. So I know price isn't going to respect this as a breakaway gap, at least right now. I don't believe it will. You know, maybe price was just going to sweep this liquidity right here on the 1 minute, right? This little liquidity right here, and then keep going. That could have been a possibility. Like maybe if this was a New York session, I would have trusted something like that. But because this is London, I don't really know what's going to happen. And I would prefer the price for, you know, I want to see what's going to happen when we get around here at this order block, right? Because if I had a stop loss, like maybe all the way down here, that's still a 3-to-1 risk to reward ratio. But the thing is, you know, trades like this, you don't really want to rush them. You don't really want to rush too fast and try to get in there. I just gave y'all a nice little master class right there on, you know, price action and how to find trades using the first presented fair value gap for, you know, the London session.